Hey guys, welcome to another episode of Tax Law Guy. Tax attorney Joshua Sells here today, and we're going to be talking about something that we receive a lot of comments about, a lot of questions about at our law firm, and that's the new IRS Cash App taxes rule, or reporting rule, I should say. So you probably have heard about it if you use any of the Cash Apps like Cash App or Venmo or Zelle or any of those cash-based transaction apps. You probably have heard that the IRS has, through the American Recovery Act, reduced the threshold by which the IRS is going to report those transactions. So that was reduced to $600. So if you transact more than $600 combined through one of those Cash App programs, the IRS is supposed to report that, or I should say, the vendors are going to report that to the IRS on a 1099-K. Now that's been put on hold. Okay, so the IRS said just about a month ago, the IRS said that the implementation of that is too complex. They're expecting millions of additional 1099-Ks being reported to them. So they said that their systems just could not handle that. So they put the reporting requirement on hold. So everybody kind of sighed a sigh of relief, and all is well, right? Hold on, pump the brakes. I'm here today to tell you that that reporting requirement was for transactions in 2022. That was last year. So none of those vendors, none of those Cash App transaction platforms are going to report this year for last year's transactions, but I'm sure the IRS is going to get this figured out. So unless Congress changes the law come next year, those transactions are going to be reported to the IRS. So this is very important as we talk about Cash App transaction or Cash App taxes explained, that we do something now this year so that we're not in the same boat next year. So that's what we're going to talk about today on Tax Law Guy. All right, so as I said, talking about Cash App taxes, explaining Cash App taxes, tax reporting, the law that Congress passed as part of the American Recovery Act removed the original $20,000 threshold or the 200 transaction threshold for reporting. This reporting's always been around for quite a while. It's places like PayPal or Amazon Seller, where you transact in an e-commerce environment through credit cards or electronic payments. Once you reach that threshold, that $20,000 threshold or the 200 transaction threshold, the vendor would report that under your social security number or EIN, if you operated under an EIN, to the IRS at the end of the year or in January for the previous year. And the idea was that people who were doing electronic commerce maybe not, or may possibly be not being honest with the amount of revenue that they received. So that's why the IRS required reporting on those transactions. Of course, generally speaking, could be more complex than this, but generally speaking, self-employed individuals, somebody selling on eBay, for example, through PayPal, would report that income on a Schedule C of their 1040, and then there would be no problems. Well, lo and behold, with the American Recovery Act, Congress thought that even folks under that $20,000 threshold were getting away with tax fraud and tax evasion. So nonetheless, they got rid of the threshold and they said, hey, if you do more than $600 of electronic payments, that has to be reported to the IRS. And so apps such as Venmo or Zelle or the Cash App program, we're going to report if you transacted more than $600. Now you may be saying, well, wait a minute, I'm not even in business. I just use the Cash App because it's convenient. I go out to eat with somebody and it's so much easier for one of us to get the bill, and I'll just send half of it through my Cash App. And you may be saying to yourself, why would that be reported to the IRS? Hey, that's a great question. And we're still kind of dumbfounded by that as well. Getting rid of that threshold really didn't make sense. So I'm here today to talk about how going forward we can protect ourselves from reporting to the IRS by using Cash Apps, Venmo, Zelle, different apps like that. Number one, all of these platforms allow you to put a description. So if you go out to eat with a coworker, or one of you picks up the bill and you reimburse the coworker for your part of the meal, make sure that in that description you put reimbursement, lunch reimbursement, reimbursement with John Smith or whoever it is that you're having lunch with. Put a description there that specifies that is a reimbursement. Reimbursements are not taxable. So even though that may be reported to the IRS, if the IRS were to ever audit you, that they would be able to see that, hey, that was a reimbursement. That's a non-taxable event. Do the same thing for gifts. We have nieces and nephews that we've used the Cash App for, Zelle, Venmo, to send money. Maybe it's a graduation present. Maybe it's a birthday present. Make sure you write on there that this is a gift for Susie or whoever it is. Specify the details in the description before you send that payment. So number one, use the description field to specify that it's a non-taxable transaction. Number two, when somebody is going to send you money, make sure that you specify to them to include that description. So it's not just for you sending out a transaction. If somebody's going to send you money, that also needs to be specified in the description. So it's not just your responsibility as you're sending out these payments to specify that it is a reimbursement or that it is a gift or that it is paying somebody back for something. It's also your responsibility to inform the person that's paying you. You don't want to be caught with all these cash deposits in your bank account and the IRS coming and saying, hey, you must be conducting a business. So make sure that they specify in that description. So number one, you specify in that description that's a non-taxable event. Number two, they specify in that description that it's a non-taxable event. Number three, and this is very important, for large transactions, I don't recommend using Venmo, Zelle, or Cash App. For that reason, the higher the dollar amount, the more scrutiny that it may face with the IRS. So if somebody is going to send you a couple $1,000s through the Cash App, I highly recommend that you just do the old-fashioned way and use a paper check. Just deposit it into your bank account as such. Most of our phones have, or most of our banks, have the app feature where you can take a picture of the deposit and put the check in that way. So for large transactions, I don't recommend using those cash-based apps because it will be reported to the IRS. And if you have, for example, maybe you pay your grandma's mortgage. Maybe she's behind a month, and out of the kindness of your heart, you go ahead and pay that mortgage, and let's just say it's $1,500. The following month, she says, hey, I want to pay you back for what you did. And sure, go ahead. And you use one of those cash apps. Maybe grandma's up with the times, and she uses the Venmo or something like that to pay you back. And that ends up getting reported to the IRS. Hey, that could be a red flag if the IRS gets a 1099-K for $1,500 that was paid to you. So it's very important for large transactions. Don't give the IRS any ammunition to come looking through your finances. Keep those out of the cash transactions. So number one, very important, make sure that you put a description when you use one of those Cash App programs. Number two, make sure they put a description whenever they use one of the Cash Apps. And number three, keep large transactions out of these cash-based apps. Again, three very simple things to keep you off the IRS radar with this new reporting requirement that I am sure, absent any direction from Congress, is going to be implemented by the IRS this year for reporting in 2024. So 2023 transactions this year will presumably be reported to the IRS next January once they implement their new system. So very important if you want to avoid any issues with Cash App taxes. Very important that you just follow these three simple best practices, if you will. Again, it's a great feature to have. We use it all the time, especially for reimbursements, just to friends or family members. But again, if you follow those three simple things, you'll be able to stay out of hot water with the IRS. Hey, thanks for watching today's episode of Tax Law Guy. Stay tuned. We'll be having more episodes coming up weekly, and as we dive into more common issues with taxes and with the IRS. So thanks again for watching. Have a good day.